Hi, welcome to this tutorial discussing the income statement. The income statement is one of the three main financial statements that a company does at the end of a period. As the name suggests, I want you to think of income and how this relates to the money that a business may earn. A business at the end of the year, when pulled together with everything that was done from January all to December, if that's their fiscal period, may be operating at a profit, and that is called a net income on the income statement, or a loss if they're falling short. The purpose of the income statement is really to show the net proceeds of a business. And this means that we want to see what the company has left over from the money collected from sales after paying all its expenses. Before I go in depth about calculating the net income or the net loss on an income statement, I really encourage you to have the following materials handy: your textbook, your notebook, a sample packet if your instructor had given one to you, and a pencil in the event you have to erase. As we go through, I have three questions that I posed as trial and error questions for you. And this is really a good check on what we know about financial statements, of which the income statement is. The first one: how many financial statements exist? You may be thinking one, two, three, or a lot more. But the main financial statements that really exist are the income statement, the balance sheet, and the cash flow statement. So there are really three main financial statements. Two, when are they done? They're done over a specific time period. For instance, the income statement shows the net income over a year, and this year is called the fiscal period. Some companies' fiscal period may be from January to December, while others may run from March to April in a 12-month time period. Regardless, the income statement will show the time period that the money is reflecting. Third, what is the purpose of doing these income statements? Well, you want to have certain information about your business. You want to know if you're operating at a profit or a loss, and your investors want to know this information as well. They want to know if they should invest in you because they're investing in you because they want you to pay them dividends. And if you are operating at a net income, a high profit, then it might be a good sign for investors. Not only investors, you may be looking for a loan from the bank, and some banks requires these financial statements. One of the most important things about these financial statements that you should understand is that at the end of the fiscal period, when you pay your taxes, you have to produce your income statements along with the file that the form that you file. At this point, you should have already noted what the income statement is, and these things are specific to the income statement. One, it shows information over a specific period of time, and this information is going to be in monetary terms. We're going to be using money. Second, it shows if you made a net income or a net loss over that specific period of time. And three, it is as simple as listing your revenues, which is this big word for sales, the money you collect, subtract your expenses. And I just want to pause here for a little while so that we understand what the word revenue means. Depending on the type of business that you have, your revenue may vary. If you're a lawyer, the money that you get from your clients, that's your revenue. If you're a teacher, the salary you get from teaching, that's your revenue. If you operate a restaurant, the money you collect from selling food, that's your revenue. So your revenue is synonymous to sales. Some persons say sales is a type of revenue. We can get deeper into it. You can have multiple channels of sales because at your restaurant, you may not only sell food, but you may sell drink and that opens up your revenues, and persons may want to see their sales figure from the two different channels of revenues. What we're going to be looking at is how to construct a single step income statement, which is a very simple form of income statement. The income statement has four main parts. You need the heading, you need the revenue, you need the expenses, and then you're going to compute the net income or the net loss. If your instructor is as meticulous as I am, you may want to pause to ensure that you have these critical parts of the income statement. A single step income statement really just requires you to do one subtraction to arrive at your net income or net loss, which is in line with why it's called a single step income statement. I'm certain you're used to seeing financial statement worksheets in a Word document, but I chose to do it in the form of a Excel template worksheet in Google Docs if you're used to using that, just because I feel like it's easier for us to calculate using a worksheet template. And so here's a template showing the four major parts of the income statement. So the first step, I had mentioned the heading. The heading has three major components. You need the name of the business, you need the name of the report. Here, the report is the income statement. Remember, I told you there are three financial statements, and so depending on which one you're doing, that would go in line 2. And for the month ended or for the year ended, and there would be a date there, December 31st, 2014. Sometimes you will see for the month ended, if a business is large and they have to do a statement each month just for consolidation purposes at the end of the year, to have their figures together. Or if you're in a classroom setting right now, you may get it per month to keep the content short and manageable for you. The second step here is to list your revenue, and I told you that sales is one form of revenue. If you had two channels, you would have sales listed twice there. That's optional. Some persons combine it, and that's fine. And then you have your expenses. You would list your expenses in alphabetic order. So notice advertising expense is followed by insurance expense, followed by miscellaneous expense, followed by supplies expense, followed by utilities expense. And the income statement does not have a debit and credit column per se. And the reason I highlighted in yellow for you is because that's where you're going to put your information. As accountants, when we have something to calculate, we create this inner column to the left for calculations. Now, the reason why we have an inner column there is because we want to be able to list all our expenses and add them up all together. And so for that reason, we have an inner column. So if you look at the format here, you're going to be starting with your sales, and you will be putting it in that yellow highlight next to sales. And then you list all your expenses in the middle, add them up so that you could put them over in column E14 as total expense, and then do your subtraction to get your net income. I want you to pay attention to the far right in the column F where it says percentage of sales. Now, your instructor may require you to do this, or they may not require you to do this. And once this is done, it's actually easy to calculate the percentage of sales. The percentage of sales is calculated as a percent of sales. So there are three main things here that you want to calculate as a percentage of sales. Sales in itself is always going to be 100%, because once you put it over 100 and try to find the percentage of that, it's going to work out to 100%. And then whatever your total expense is, you're going to put that over your sales figure times 100. And the same thing for net income. You're going to put it over your sales line times 100. The bottom line is a percentage of sales helps you to speak to your data in a more effective way. You want to be able to say that 50% of your sales accounted for expenses, and the next 50% went towards your net income. It doesn't have to be 50-50. It may end up being 70-30. 40, 60, but whatever your total expense and net income percentage of sales is, it's always going to add up back to 100%. And the next slide will show you a little bit more practicality with some of those things that I just said. Here we have a completed income statement for Mary's Boutique, income statement for the month ended November 31st, 2020. As you can see, I listed my sales, which was $4,000, in the second column, and I listed my expenses in the first column, and that is because I wanted to have that ability to add them up and put the total in the second column. The total is 650, so that I can see that the income statement is a clear subtraction of my revenues and my total expenses. My revenues, the money that I collected from sales, was $4,000. I subtracted all my expenses of 650, and because I have money left over, my amount is positive. It is called a net income. Had that amount been negative, let us say that our expense were far greater than our sales figure 4,000, we would have had a net loss. And so let us figure out what the percentage of sales look like. And so sales as a percentage of itself is always going to be 100%. My 650, when I put it in my calculator, 650 divided by 4,000, and I times that by 100, I get 16%. It means that 16% of the money I collected from sales went towards paying my expenses. That is not bad at all, because it then means that my 3,350 represented 84% of my sales as net income. And how I found that 84% in my calculator, I put $3,350 divided by 4,000, and then I times it by 100 to get 84%. So here you have Mary's Boutique income statement for the month ended November 31st, 2020. Remember, one of the reasons we do the income statement is because we want to have a clear view of what our revenue is, all our expenses together for the period, and the net income or loss that we're making. And in this instance, we were making a net income. In the event you did not follow through when I was discussing the percentage analysis, which is that 84% and 16%, I made a clear view of it for you. To calculate your total expense percentage component, you need to take your total expenses, divide it by the total sales, and times 100. And in our problem, it was $650 divided by 4,000 times 100. The same for the net income component percentage. You would take the net income of 3,350 divided by the total sales of 4,000 and times it by 100 to get our 84% net income percentage. I wanted to leave you with 3 tips and tricks for constructing an income statement. As you try to find your net income or net loss, remember, there is only one main calculation, and that's your revenues minus your expenses. 2, use a spreadsheet. This could be Excel or Google Sheets so that you can use AutoSum to add up your expenses quickly and other formulas to do your subtraction. And 3, remember, positive amounts is called net income, while negative amounts is called net loss.